Welcome back to the channel. Today we're diving into the top 3 crucial rules for successful investing in 2024. These are the principles that have helped me and countless others build long-term wealth, and they're especially important in today's market environment. We'll break down each rule step by step with practical examples you can use to make smarter investing decisions. Let's get started. Rule number 1 for successful investing is diversification. You've probably heard the saying, don't put all your eggs in one basket. It's about spreading your risk across different asset classes. Not putting all your money into, say, tech stocks. Diversify across stocks, bonds, real estate, maybe even art or wine. Include international exposure. Add small cap and mid cap stocks. Think of your portfolio like a well-balanced breakfast. Diversification creates balance in your investments. The goal is to smooth out your returns over the long term. Investing is a marathon, not a sprint. Use low-cost index funds and ETFs. These funds allow you to invest in hundreds of stocks or bonds. Diversification is about managing risk for long-term success. Now, let's move on to rule number 2. Stay informed about market trends. Look, I get it. Following the market can seem like watching paint dry, but it's crucial to understand the forces that are shaping your investments. This doesn't mean you need to be glued to CNBC all day or become a financial news junkie. But you should make an effort to stay up to date on major market events, economic indicators, and industry trends. Think about it this way. If you were running a business, you wouldn't just ignore what your competitors were doing or what was happening in your industry, right? The same goes for investing. You need to have a general understanding of the playing field. So how do you stay informed without getting overwhelmed? Well, start by subscribing to a few reputable financial news sources. The Wall Street Journal, Bloomberg, Financial Times. These are all great options. And don't be afraid to diversify your news diet. Follow some financial influencers or YouTubers who resonate with you. But a word of caution here, always double-check the information you come across. There's a lot of misinformation out there, so it's important to be discerning. Another great way to stay informed is to follow earnings calls and investor presentations of companies you're invested in or considering investing in. This is where you get to hear directly from the horse's mouth, so to speak. Remember, the goal of staying informed is not to become a master stock picker or to time the market perfectly. It's about making more informed decisions. It's about understanding the why behind the market's movements. And finally, rule number 3, and this one is arguably the most important, have a long-term perspective. This is the single biggest factor that separates successful investors from the rest. You see, the market is going to go up, it's going to go down, sometimes it's going to feel like a roller coaster. But over the long term, the stock market has always trended upwards. The problem is, most people get spooked by short-term volatility. They see their portfolio drop 10% and they panic sell, locking in their losses. Or they get caught up in the hype of the latest meme stock and end up buying high and selling low. Successful investors, on the other hand, they understand that investing is a marathon, not a sprint. They don't try to time the market or chase quick returns. They have a plan, they stick to it, and they let the power of compound growth work its magic over time. Compound growth is like this snowball effect. As you earn returns on your investments, those returns are reinvested, and then you earn returns on your returns, and so on. Over time, even small amounts of money can grow exponentially. But here's the catch: compound growth takes time. It's not something that happens overnight. It requires patience, discipline, and a long-term perspective. So how do you develop a long-term perspective? Start by defining your investment goals. Are you saving for retirement, a down payment on a house, your kids' education? Once you know what you're investing for, you can create a plan and a timeline that aligns with your goals. And when the market inevitably throws you a curveball, remind yourself of your goals and your timeline. Don't let short-term noise derail your long-term plan. Thanks for watching. If you found these tips helpful, don't forget to like, subscribe, and hit the notification bell for more investing advice. Remember, building wealth takes time and effort. Stay disciplined, stay informed, and stay focused on your long-term goals. See you in the next video.